Hi, this is Michael O'Leary from By the Book Taxes, back with this week's video blog installment. Very interesting topic called Discharging Federal Income Taxes in Bankruptcy. I'll bet a lot of people don't even realize you can discharge federal income taxes in bankruptcy. So let's walk through it. Okay. It is possible to discharge federal income taxes in bankruptcy. It's called a Chapter 7 liquidation of debts, which is available to individual taxpayers. The important thing is there are some specific guidelines, do's and don'ts, as well as timelines that must be satisfied in order to qualify. Okay. The two guidelines that are important are an actual tax return must have been filed. There's something that the IRS calls an SFR, substitute for return. What that means is a taxpayer has never filed a tax return, so the IRS goes ahead and prepares a tax return on behalf of the client without giving them most of the deductions they're eligible for based on the tax information that's been reported to the IRS. An SFR does not count as a real tax return, and you cannot discharge in bankruptcy the taxes associated with the SFR that the IRS files. An individual must file an actual tax return in order for that year to be eligible to be discharged in bankruptcy. The second guideline is that no tax return can have any fraud or willful tax evasion associated with it and be dischargeable in bankruptcy. The cliche is fraud is forever. So the IRS forever, they can come after you if they believe fraud or tax evasion has occurred on a tax return. Okay, 3 timelines here. In order to discharge the taxes, the due date of the tax return in question, including extensions, must be at least 3 years prior to the bankruptcy filing date. And if you filed the return late after its original due date, you must have filed it at least 2 years prior to the filing date. And if that tax year was audited or amended and additional taxes were assessed, those assessments must have occurred at least 240 days prior to the bankruptcy filing. Two types of taxes you may not discharge in bankruptcy: payroll taxes, sales and excise taxes. These are called trust fund taxes. These taxes are either withheld from employees by employers or collected from customers by businesses and must be forwarded promptly to either the U.S. Treasury or the local, state and local taxing authority. You may compromise payroll taxes and sales and excise taxes, but you may not discharge them in bankruptcy. Okay, if you have years of unfiled tax returns, owe the IRS a lot of money, are considering filing for bankruptcy and want to know what the tax implications are, please call me. I can help.